All right, we are in the cloud, and it is Friday, September 28th, 2018. I am Kirk Spano, and as some of you know, back in August, I did that big trip around the country, and I talked about some of the pictures that I took and some of the things I saw. Thought I'd just spend a couple minutes talking about something that is important to the development of the economy, uh, to the socio-economic structure, to the psyche of not only labor but investors, and something that we really ought to be thinking about not only as a social issue but really as an economic issue and an investment issue, because there's actually some pretty big investment opportunities here, and we've talked about a couple of the real estate investment trusts that I like. So back in 2008 or 9, I drove across the country in both years and saw that a lot of these malls were falling apart, especially in 2009, 2010, 2012. There were a couple of years where I didn't make the big 3,000 to 4,000 mile trip just driving around the Midwest and the East Coast. Um, but most years I did. And I ran into some malls that caught my eye because I tend to take the U.S. Highways and not the interstates, just because I want to see what's around. And I would find these malls that were empty, and you could tell they were empty because they had the parking lots with the overgrown grass, and it just looked like the whole area was dead. And we have a mall like that in Milwaukee called Northridge. When I was a kid, it was the mall that everybody went to, and now it's a neighborhood that's not quite as well-to-do as it used to be. It's at the edge of a couple of suburbs, but still city of Milwaukee proper, I believe. And it fell apart, and there's been plans to reinvest in it and redevelop it for 20 years now. Well, over the last 20 years, a lot of malls have gone down, especially in the last 5 or 6 or 7, because of what we've called the Amazon effect. And the Amazon effect, you know, is more than creative destruction, I think, and that is something that we have to keep an eye on. How are we going to deal with this massively changing economy, right? How do we deal with technology changing, the way labor works, the way that pay is distributed? Um, how do we keep from having an even more bifurcated society where maybe 20% of the people are doing pretty darn well, um, and only 1 or 2% are doing, really, really well? Um, but we have 60% of the people who are, mouth, hand to mouth, paycheck to paycheck, and 20% of the people, give or take, that are just outright poor, very, very poor. Um, it doesn't make for a good social mashup when 80 some percent of the population is just struggling to pay the bills and find a way to make ends meet. So we're gonna have to deal with that. This is an article that was just in and I think they redo the article almost every year. But this was just in Business Insider. This is another service that I actually pay the premium to. Business Insider's premium is pretty darn good. I don't have a discount for you on that one. I do on Value Walk Premium that I'll give you again. Um, but these malls are closing all over the place, and um, this guy Seth Lawless, he does quite. Let's see, where can I find him? Yeah, Seth Lawless. This is the name that he uses, and he goes around the world taking pictures of abandoned stuff, and it's just fascinating that we walk away from things rather than redeveloping them, especially when there's populations in play that they need good things in their areas, and we just let them fall apart because an investor loses money, they walk away, and it just ends up being a lump of something in the middle of where there should be some good. There's something bad is something in the place of something good, and it destroys neighborhoods, and it adds to urban blight. and we have to deal with that. But if you get a chance, take a look at Seth Lawless. This guy's photography around the world is just amazing, just amazing. So if you get a chance, take a look at this. And what I want to show you is, if I can figure out how to do it again. All right, so some of my pictures I'll put out there. Well, it looks like somebody is not muted. All right. I finally figured out how to show them to you. Now, it's baseball season, and one of the places I went was Busch Stadium. I'll tell you what, it gives me no pleasure to say I think this is the best baseball stadium that I've been to. Now, granted, I have about 20 to go to yet. I've been to 19, including some that aren't around anymore. But yeah, Busch was really pretty cool. Are we not? There we go. Yeah, Busch is just, you got the arch there. This whole baseball area back here, I forget what they call it, Baseball Village or something. Just an amazing stadium. If you're a baseball fan, go to Busch. The people are actually very nice. It's just that they're Cardinals fans. And, as a Milwaukee guy, I have a hard time with that. Very happy that we swept them this week and qualified for the playoffs. I am a poker player, so some of the signs caught my eye. Bluff City. We did not go to Bluff City, but when we finally made it to Connecticut, Foxwoods, we did. Couple of spots out here in the I think this is Indiana. Pretty sure this is Indiana. Notice way back in the back here, those are solar panels. So one of the things to keep in mind from an investment perspective, when you're driving around, take a look at what's going on around the country. So this is an area, I can't remember the name of the cities that we were near, but actually quite a bit of solar, and it was the farmers doing it. Why? They have the land, right? And they're looking for alternative ways to make a little money and cut their own expenses. So this guy was running his farm, and his grain silos, and he had some processing over on the side here, but he was running it. There's a giant battery back here. I didn't take a good picture, but giant battery back there, battery bank. You're seeing this all over the country. And I have a couple more pictures I'll show you in a second. I have one here. Oh, here it is. This is the one. We get out there and we see these places, and I just thought this was a pretty good picture. So way back here, can't really see it. That's probably the top of a truck there. It's the interstate. I just thought it was apropos that I take a picture of the dead end sign. Are some of these places facing a dead end, right? I show you, all the places that are falling apart across the country. It's empty malls all over the place. I mean, these places really are pretty beautiful, but we're not using them, and investors just walked away. So the question you ask is, what do we do about that? We still have a slowly increasing population. We're not allowing immigration right now, and I think that's a mistake. But I think that if we really want to see the economy grow, we have to refurbish a lot of these places. And that's something that we need to keep an eye on as investors, because as the supply of stock slowly decreases here, and I don't really see an end in sight for that, the stock market will go up until there's an event, and then then we have a crisis or a recession or something like that. And we're going to talk about that in a couple of minutes, because hard to know when the next recession is. As I've written, there's a ton of money out there, just a ton of money. And, how that sloshes around and gets allocated is important. When it's hoarded by, really the 0.5% richest people have just a ton of money. When that money's not flowing, when it's not being recycled back into the capitalist system, then capitalism fails. And that's what we really have to think about is, okay, what signs are we looking for as investors? Is capitalism doing things well, or is capitalism stuck? And right now, because of all the money that the Federal Reserve printed for the most part, and some other central banks, but mainly for us, it's been the been the Federal Reserve. It's not all that difficult to get money, right? And you see it in real estate prices. I checked out high-end real estate. I checked out beaten down real estate. I tell you what, I think the biggest bargains in America for real estate are not in the cities. In fact, I think the cities are going to have a big problem again. But if you really want to make money in real estate, get a half an hour or an hour away from a city and find one of these little towns that is not doing so well. I mean, I know you don't want to go somewhere like I was in Beaver Falls, and I was actually kind of concerned for my safety. But you don't want crime, but at the same time, I'll show you some more pictures here in a second. Um, how do you rebuild things, and where are the opportunities? If you really want to buy low, get a half an hour to an hour outside a big city, some little town that lost a factory or lost a steel mill. I sent Jeff Bezos a series of tweets. He didn't reply, obviously. But I suggested that Pittsburgh was the place that they should put the second Amazon headquarters, because my rationale was the East Coast doesn't need more reason for there to be people on the East Coast. The East Coast is overcrowded. There needs to be millions of people that move off the East Coast. The middle of the country has land, it has infrastructure, it has huge opportunity. And I think Pittsburgh would be a great place for the new Amazon headquarters, because when you drive around the countryside there, what you realize is that it'd be pretty easy to set up a rail system. And some of these towns used to be just gorgeous. I'm going to show you, this is Connecticut. This is not what I wanted to show you, but it is cool. Okay, here's Pennsylvania. So this is our first run through Pennsylvania, and this is an area half an hour outside of, again, I forget which cities each one is near, but it is within an hour of a pretty good sized city. And you just take a look at some of the things. This is a little town that probably used to have several thousand people, next to another town that has several thousand people. And some of these places are just falling apart. So some of the places look all right, but just so much stuff that you wonder, why are these areas that are beautiful countryside just so beat to hell, right? And you ask yourself the question, okay, it's because jobs moved away or technology got rid of the jobs. So I think we need to start asking ourselves, how do we use technology to refurbish these areas, right? In an age of the internet where you don't really always have to be in an office. I know people who are go to their office 4 times a week, but they really could do it once or twice. I really don't need an office with what I do. In fact, I'm moving in the direction of traveling 4 or 5 months a year to inspect companies, play poker. But really, I want to see what's going on in the economy. And we have a very bifurcated economy right now. So if you're doing well, that's great, but you better think about what's keeping it up, because there's a lot of folks, and this is Pennsylvania here, and I talk to a lot of people in Pennsylvania because I want to know what they're thinking. There are a lot of people who, are still not happy. They've been passed by and they're angry. This is near the naval base in Connecticut. You see that it's all solar. Right? This is the future, folks. This is where the puck is going. How fast does it get here? That's a pretty big question, and it really has to do with battery technology. I sent out an article this week about some battery technology, which I told you was coming just a few weeks ago, right? I said there's going to be a breakthrough in batteries, and it's coming. It's right on top of us. And sure enough, there's a zinc air battery now that excuse me. It's going to replace lithium at a large scale. The small lithium batteries will survive, but The toxicity problem with lithium batteries is a significant problem. It's something that the bears on electric vehicles point out over and over again, and it's legit. And in the short term, we're going to have kind of a hybrid system where we have the lithium batteries, but those are going to give away to zinc air and probably another technology within a decade, maybe 5, maybe 4, maybe 3 years. I know engineers in the field who say that, look, we're right on top of this stuff. And so when we go from solar and zinc air or flow batteries, what you're going to see is a massive transition that's going to happen suddenly. So while we're moving slow into the alternative energy future and the electric vehicle future, remember what I keep preaching. Change happens slowly until it happens what? Somebody type it in. Change happens slowly until it happens suddenly, right? Ask Toys R Us, ask Radio Shack, ask Blockbuster, right? We had a talk about a company that I was high on this week that I'm no longer high on. And sorry, I can't talk right now. Puerto Rico. Somebody just called me from Puerto Rico. Anyway, when you travel around the country, you get to try some good things. That's Connecticut. All right, so a couple of neat things that we saw. Mystic Pizza. There you go. I want to find more Pennsylvania for you. Well, this is outside of Boston. I forget the name of the town, but we stopped here, and because I needed gasoline, we ended up going to a McDonald's. Anybody recognizes these places, remind me of the name. But I mean, this is not far from Boston right here. Half an hour, Manchester maybe? I don't know, something like that. And we find all these places that you're half an hour to an hour away from nice stuff, but you're finding big boarded up buildings, and factories that aren't operating. And I think I'm probably going to pull up some Brooklyn for you here. And I'll tell you, this is Newark. Yeah, Newark, just, I can't tell you. The first time to Newark, it was horrible. Where is this? This one might be Brooklyn. I think this is Brooklyn. Yeah. So, I forget what type of, these are Jewish folks. And are they Hasidic? I think they might have been Hasidic Jews. So they move into neighborhoods around the country, apparently. And right now they're in a neighborhood in Brooklyn, and they're fixing it up. We were there on a Monday night. Hundreds of folks out on the street, all dressed like this. And there was some holiday or event going on. But we drove around this area, and we found the places where they had worked on and where they were moving to. And you could see it was like just block by block. They were fixing up the neighborhoods. And I think that as a society, we got to figure out ways to do this a little better. I mean, they're getting, they're making, this isn't where they were. This is Queens, I think. Queens. If you're not getting around the country and seeing some of this stuff, I encourage you when you get a chance to do it. Again, Newark. This is that's a firehouse, I think. Yeah, but Newark was pretty rough. Brooklyn, Queens. I tell you, if you're not on the water, you wonder about some of these places. Why are some places getting passed by, right? We need to ask that because eventually it matters to us as investors and for our jobs. I'm going to pause right here. I'm actually going to open this picture up and bring it back up later. All right. Back to Beaver Falls. So after a big hunk of the trip, we're driving back. We're outside of Pittsburgh. I'll show you I'm not going to show you all the pictures of me geeking out with the space shuttle and with the Enterprise. And here we go. So heading into Beaver Falls. Beaver Falls is maybe 45 minutes, an hour from Pittsburgh. And this is a town. Remember the show Mr. Belvedere? Right? So Mr. Belvedere, this is the town. This is the town where it was supposed to be, a real nice area. And in the last 30 years, it's just completely fallen off the map. This is where Joe Namath is from. And he hasn't really done much for it. And, you take a look at what's going on. And this is, I think, and if you Google Beaver Falls, other people have pointed out Beaver Falls. I discovered it on accident. So I was driving to Washington, D.C. a decade ago, and I had a transmission line blow. And this is where they told me, and the people at the car dealership are very cool with me, and they helped me get on my way. But I take a look through in here, and I wanted to see. The reason I came back is I wanted to see if the city was doing better 10 years later, right? Because I predicted Donald Trump would win because I knew that there was disaffected people in the Midwest. All right, if you read my annual letter, and I'll pop it up here in a minute, from a couple of years ago, I predicted that Donald Trump was going to win because I knew that folks in the Midwest felt overlooked, passed by, disrespected, and even though the economy in broad macro terms was doing well, it didn't permeate. And so you've got people in Pennsylvania, in Indiana, in Michigan, lesser extent Wisconsin, and Ohio. Wisconsin and Ohio are actually doing pretty good. But they just feel disaffected. And I'll tell you, I've driven all over Pennsylvania. What a beautiful state, but man, it's just not doing well. Pittsburgh's kind of the exception. Philadelphia's not doing well. Rest of the state, the little towns where the steel mills were, and the factories, not doing well at all. So I wish these would pop up just a little quicker. The neighborhoods used to be, you could tell that they used to be awesome. But they're starting to fall apart. The only new buildings in Beaver Falls that I found, look how beautiful that building would be if, it wasn't, it looks desolate, right? So we were there on a Sunday morning, Labor Day weekend. It might have even been Saturday. No, it was Sunday. It just, yeah, it was just horrible. It was spooky. So I don't know what to tell you. If you ever are driving through the area, I highly recommend the Brighton Hot Dog Shop. They took care of me and my kids 10 years ago, and they're still around. The new buildings in the area. Look at these buildings. These are the older buildings. Imagine what this town could be if 5,000 people who are working at Amazon moved in. A half an hour away. Put a train system in here to just zip them right to work a half an hour away. That would be awesome. Some of the places. Look, just come on, man. That's what's going on. And this isn't the only town that I drove through, right? Look how beautiful this building is, and then look what it is. They just got the stupid little signs in there. They're not even using it. It's basically empty. And honestly, if I will tell you this right now, and this is the God honest truth, if Amazon announces that they're putting their headquarters in Pittsburgh, outside of Pittsburgh, and if it's on the north side of Pittsburgh or in that general area, if it's within an hour of Beaver Falls, I will move to Beaver Falls and I will try to buy this building. I will. I'll put my office there. I'll start running out of there. Why? Because I can. Because this would be a town to invest in if this is if Amazon would move there. What were the new buildings in the community? Health and Human Services. Really. It's the best we can do. A government building. And there some projects got built. I don't know if I have the pictures of those. They're around. Here's the past. You know, imagine this area 30 years ago, bustling with people working in the area. This is what's left. It's really heartbreaking to me that there's areas around the country like this, and it's not just Pennsylvania. I mean, you go down south, you go to almost any state in the country, but Pennsylvania, I think, is taking it pretty bad, and I don't understand why, because of their proximity being between the East Coast and the Midwest. I don't know why Pennsylvania's been left behind, but they sure have been. So. I had a picture of the projects they built, but the three new things in Beaver Falls here projects, that Health and Human Services building, and an assisted living facility. So the government basically moved a whole bunch of poor people there. Said, "Hey, we got this town, we can put you in," and it's really what it was. I mean, there's like there's no wealth in the city anymore. There's no gentrification. There's no jobs. It's welfare old people. It's welfare young people, and in between is because really it is. Here's the projects on the west side of town, Health and Human Services in the middle. Then the east side of town was the assisted living facility. We're shipping people, just shipping them. It's pathetic, this country, that we do it that way. All sorts of closed down stuff. So anyway, I just wanted to kind of help you think about, what are the real opportunities over the next 20 years? Well, and I just glanced at the chat, so I know that you guys are talking about it, and we'll get to it. But there's going to be big opportunities for redevelopment, and that is something that we're going to look at. I don't like the REITs right now. I think the REITs are expensive. I think there needs to be a correction. But when it comes, we need to be in the right 2 or 3 REITs that are going to help with this redevelopment. Think about Simon Property. That's one that we've talked about. Simon Property owns a bunch of malls, and those malls are starting to get redeveloped. But they still need to have some jobs around them. There needs to be a way of generating capital at the micro level, at the labor level, right? Folks need to earn a good living, and middle class wages have been stagnant for the better part of 35 years, adjusted for inflation, right? So we have to really think about these things, and we have to avoid the ideology, because I know people talk about taxes. Well, this state's got a better tax policy. You know what? I hear people in Texas say that all the time. That's crap. Texas does well because they have freaking oil. And they've used that oil to diversify into diversify their economy, right? So, don't tell me, oh, well, they don't have state income tax, so they're going to do better. No, I tell you what, Texas's education system is one of the worst. And in the age after oil, if they haven't reinvested in their education system by then, which they're not, I have 2 teacher relatives down there. They're gonna have a problem. If you can't send your kid to a private school in most of Texas, your kids are screwed. So, there's a few, suburbs and whatnot that have real good schools, but it's the same thing in most of the country. The big cities are screwed on education, and it's because we, have broken family infrastructures. We have bad socioeconomic infrastructures. We're not getting people training and jobs. There's a lot of things that we're not doing, and this top-down approach to fixing things, if we haven't figured out in 35 years that doesn't work, that it just creates more haves and have-nots, then we're not paying attention. Because every single chart, and maybe I'll do it someday, but every single chart you look at demonstrates that since the early 1980s, and I always come back to the early 1980s because that's when it started, we've been splitting the country in 2. And most of the folks on this call, myself included, we're in the haves, right? We got jobs, we got money to invest. 80% of the population is not in our group. That's a problem. We need 60, 70, 80% of the country to have something. Otherwise, as we know from international relations, the poorer the nation, the more likely it is to go to war. And the more people who are disaffected, and whenever the next recession comes, better be careful. Whenever the next recession comes, people don't get angry. Right now, everybody's, fat enough that they're not angry. But, you start taking away people spending money. Um, Honestly, the drug trade supports a lot of people in this country, and now it's going corporate. Not that that's good. Just saying that people have money, so they're less likely to kill outside of their group. Gangsters killing gangsters is one thing, but then if they're not making enough money, they kill other people. They rob, they steal. So the socioeconomics of all this is important. One of the things I mentioned last week, or yeah, it was last week, I think. I said people need to move off the East Coast. All these folks in Brooklyn, I couldn't believe it. It was horrible. But you wonder why the younger generation is unhappy? It's because they have to move to the big cities to get employment. Technology should be changing that. It needs to. And again, if you're a millennial on this call, if you stumble into this webinar online or you find me online, my best advice to millennials: save as much cash as you can. Stop investing right now. Just save cash, save cash, save cash. Wait for the next recession, and then buy something cool. Go to a town half an hour outside of a city, hour outside of a city, and invest in that. So, by the way, Value Walk Premium. I will remind you, I have a discount for this if you want it. It's Kirk 15 off. I'll put that in the chat room. I'll post it. I'll post it in a blog or something. But I tell you what, Value Walk Premium for freaking, I guess we're getting it for like 80 or $75 a year now. Get the $15, or I think he said he's going to take it up to $20. $20 off. All right, cool. I really can't recommend Value Walk Premium more. So this is a pretty important housing. Whoops. Oh, there it is. Pretty important article right here. Talks about how the housing charts are showing that we still aren't all that close to a recession. So when you hear Jamie Dimon say, 2 years away, give or take, remember, he's heavy into the mortgages, right? At JP Morgan. So all this gloom and doom that's out there, you gotta be careful. I've said that we still have a big pop coming in the stock market because of the buybacks. Second half of next year, I'm not so sure what's going to go down, but we'll see. I don't see a crisis quite yet. The trade policy still scares the heck out of me, and the rising interest rates scare me. So we'll see. I mean, does it all come together in 2020 for a crash, or for at least a recession and a major correction? We'll see. I don't know. It just makes a lot of sense to me that 2020 is the year we should worry about. We'll be doing a lot of ebb and flow trading over the next year, which I'm going to get into now because I promised that's what we were going to do, and we haven't done it. So anyway, you've all seen this, the intelligent asset allocation report that I've done. This is a little bit older, it's a year old, but this breaks down the S&P 500 by its components. So clearly I have to update this, and now that they don't have telecommunication services. But we want to handle our asset allocation in a pretty smart way. And we know that about 90% of our volatility comes from the asset allocation. What asset classes are you overweighted and underweighted in? And if we're overweighted in the bad asset classes, that'll pull down the whole portfolio and it'll create volatility. So when we look at the S&P 500 and the 10 sectors, we want to figure out where do we want to be. And it's just very simple ebb and flow trading to overweight or underweight the various sectors of the economy. And right now, I guess Either one of these charts works. So most of us are enterprising investors. If you're retired, you'll probably have a little bit of a fixed income portfolio. But if you're not retired, you really shouldn't own any bonds at all. No, zero. If you own bonds and you're still working, or I guess if you're within a year or 2 or 3 of working, you can start accumulating some bonds. But Warren Buffett talks about being 100% in equities with some cash, accumulate cash. That buy and hold 2012 guy over on Seeking Alpha, he talks about never selling anything that he's bought, but he'll accumulate dividends, accumulate dividends, accumulate dividends over long periods when he can't find anything cheap to buy. And that's one approach. Most people aren't generating so much in dividends that they can actually use the dividends to buy a new stock every so often, right? You have to find other ways of creating cash. And right now, I think going into the October earnings season, we're probably going to hear a lot of what we heard from Micron. So Micron talked about how the tariffs are hurting them to the tune of a couple of percent over the next, 2, 3, 4% over the next year, which is not a huge number for them, but it's still 2, 3, 4%. And I think that, we need to be cognizant of how we get our cash. And you have to make a decision. Do you want to try to kind of finesse your asset allocation more often or less often, right? That's a decision only you can make. And I think that, this approach has worked extremely well for me. I've posted my numbers again. Like 92% return since the start of last year across my aggregate accounts, right? So conservative to aggressive accounts, the average account made 92% since last, started January 2017. Double money in less than 2 years is pretty phenomenal. And to do it with an average of around 30%, 25, 30% of my money in cash the whole time, you don't need to be fully invested all the time. You only need to be fully invested when a whole bunch of opportunities come your way. So Warren Buffett talks about this. He's sitting on a record amount of cash, $100 billion, $120 billion. And it's because it's not raining gold right now, right? There's not a whole bunch of safer ways to make money. And I talk about this all the time. Taking risk is not what makes you money. Avoiding risk is what makes you money. And that's why we got rid of one of our stocks that I bought last year just this week. I wrote about it. So let's just think about this. When you look at your asset allocation, if you think the market's expensive and you're having a hard time finding anything to buy, then you should trim and accumulate some cash because the prices are going to come back to you. And that's the easiest way to think about it. If you're looking at the investments that are out there and you're stretching to find something to put money into, stop. Take some money out instead and wait for the prices to come back to you because they will. Once or twice a year, the prices come back to you. And I think October is going to be one of those times where the prices come back 5%, 10%, but certain stocks will come back more. And the buybacks are huge, hundreds of billions of dollars still going into buybacks at the end of the year. And I think they're going to overflow in the next year. We might even have a big buyback year next year, so we'll see. And we have to keep an eye on that. Those announcements will come in December. So if the December announcements are pointing to a $700 or $800 billion buyback year next year for new authorizations, then probably 2019 will be a pretty good year in the stock market too. So we just have to keep an eye, let the information come to us, and adjust as it happens. So let's talk about GameStop. This article is going to go up on the free side of Seeking Alpha next week. I've been talking about GameStop since I got back on the East Coast trip. It's just I can't believe how bad GameStop made me feel. It's a company that I thought was going to turn it around. I talked to 3 managements ago. I don't even know who the management is anymore because they keep changing it. I think that GameStop is a sell at this point. Their stores suck. They have no strategy for getting into virtual reality and digital. And I showed all the pictures in this article, and finally to get to the punchline was, had a great vacation or workcation. But why did I show you all the pictures of my vacation? Well, this piece is about GameStop, and I went to 6 of their stores around the country. Not one awesome picture. Not one. Just the stores are ugly, disorganized, uninviting. There's no service. It's just really irritated me. So I sold my shares here in the last week or so. And now the stock is what Charlie Munger calls the too hard file. Now, GameStop has incredible upside. They do. But management hasn't shown anything to me in the last year that they're gonna capitalize on that. And I worry that they're going to be a Blockbuster or a Toys R Us or Radio Shack. I don't know if Radio Shack could have saved themselves, but Toys R Us sure could have. They just moved too slowly. Blockbuster, same thing. Why didn't Blockbuster, the day that Netflix popped up, why didn't Blockbuster go to every single person in their database and said, hey, we have streaming now? Why didn't they do that? In hindsight, you could say, well, gee whiz, they should have done that. Well, GameStop is not making decisions right now that I like. I'm worried that they're not going to make those decisions, and so I don't want to have my money in it. And in fact, I talk about GameStop's dying core business. And in here, find it. There. So here's the enormity of the problem for GameStop. $2.372 billion in net sales from video game hardware and software in the pre-owned game market, right? Digital sales were only $83.2 million. They need to replace over $2 billion in sales with digital. They haven't even scratched the surface yet. Big problem with these guys. Their management has to get their act together. So ultimately, I think that they have huge opportunities, but they have a lack of vision, and they're not executing. And ultimately, every company becomes an execution story, and it comes down to the management. And the management, I've lost my confidence in the GameStop management. Ultimately, they're going to have to eliminate their dividend. Why? Because they have to reinvest in destination stores. They have 5,700 video stores in America. They need about 500, maybe 1,000, but I think probably closer to 500. In the greater Milwaukee area, I counted them. I started counting them. There's a whole bunch of GameStop stores. We need about 6, right? We need about 6 GameStop stores. They need to be big enough to have virtual gaming, equipment demonstration. I talk about all the things they could do. Have GameStops be open non-traditional hours at night for kids, on Friday and Saturday to come in from 9 until 11 and game. It depends on what the curfew is by you. And those 18 to 20-year-olds who can't go to the bar, let them come in and game. And you think that won't work? You're wrong, because I drove around because my son was involved in this, and I took a look at some of these stores where they have these fantasy card games. And I don't know if you're a dragon or what you are. It's some evolution of Dungeons and Dragons. But I don't forget what they call it now. But those stores are open till 4 or 5, 6 in the morning, and the kids stay there all night, and they play these card games. So, GameStop could get into a non-traditional approach to being involved with, gaming leagues, gaming tournaments, esports, but they need to go out and buy some of the bigger buildings. Well, as we showed earlier in this call, there's all sorts of space out there for them to get into, and they can take part in rehabbing some areas and probably get incredibly favorable lease terms, right? So there is a pathway for GameStop, but one way or another, that dividend's going away, and here's why. Because either the business is going to shrink and dividend goes away, or they need that money to reinvent themselves. Either way, the dividend's gone. When the dividend's gone, that stock goes to single digits. When the stock goes to single digits, so notice I'm saying when, not if, right? When I talked about General Electric, when it was $28 a share going into the teens and staying there a very long time, I got laughed at and mocked. Where's General Electric now? Right. It's been in the teens for a very long time. And somebody's talking about Buffett sniffing around. Buffett doesn't give a shit about General Electric. He wants the engine company, the airplanes. He ain't gonna get it though, I don't think. But that's something I talked about a while ago. Buffett is not going to invest in General Electric. If he can buy a hunk of it, he will. So in any case, if you got GameStop, sell it. Wait for it to go into single digits, and then if they have a reemergence strategy, then great. And if they don't, it's going to zero. So, keep that in mind. So GameStop. We've been talking about China, and K-Web is the ETF that we're looking at. I've never even heard of this. ByteDance. I don't know what the heck that is, but apparently it's kicking butt, and it's causing problems for Tencent, which is a company that we've been taking a look at, but we've been holding off because I don't trust the Chinese in general. And second, there's huge disruptions going on in that market. So I think it's hard to pick out the winning companies. I think you have to buy the basket. And I think the only time you can buy the China basket is after it's really gotten the snot kicked out of it. So are we there yet? We're closing in. Another 10 or 20% to the downside. And then we probably want to take a look at it. Just pull up K-Web for you here real quick. Yeah. About 44 was that first price that I liked. So you see these tops here? This 43, 42.50, 43, 44 area, it was resistance. I think it's the new floor. Right in there, I think, is the new floor. So we got this little rebound here. If we get another dip here to those middle 40s, I think we at least nibble in the middle 40s. And then if it goes all the way down to here, then you back up the truck, right? But we don't know if it's going down here, but if it goes in here, I think that's a pretty good opportunity. All right. So anyway, ByteDance, it's about the IPO for like $75 billion, they said. So oil, I promise we talk on oil. Look at this. Everybody's talking about $100 oil. I know a guy. Huh. January 2017. Why oil might soon reach $100 again. The rest of the analyst world. Hey, we might see $100 oil now that's 80. Try saying that you're going to see $100 oil when it's 40. Oil's probably going to see 100. It's not going to stay there long. So here's what's going on in the oil world, and you just want to keep an eye on this. Offshore drilling globally is going to rebound in about 2 to 3 years. Why? Because there's a lot of countries that need the money, and they're going to make mistakes. They're going to overbuild. And there's a whole list of projects that I looked up that 2021, 2022, all going to start coming online. And so the price of oil is going to be on this plateau, maybe a little shorter than I thought. And I think you might even see Saudi Arabia in about 2021 push the price of oil down again temporarily, just to discourage all the competition and to throw a monkey wrench into the EV world. But I'd say for the next year to 2 years, we're probably safe with oil in the 80s, 90s, and around 100. I always have to think about the Iran pop. But by the early 2020s, there's probably going to be another oil bust, and then it'll return back to that plateau with a Goldilocks price around 80 again. But Saudi Arabia is going to have to do something to discourage competition again. And they're going to add about 400 to 600,000 barrels of oil in the fourth quarter. They've already done that back in from May to June. They actually close to 1 million barrels a day they added. So, Saudi Arabia is still the swing player, and they have to make sure that competition doesn't come online, because once there's a deep water well drilled, it stays online for 20, 30 years. So, we have to keep an eye on that. The demand equation is important. When does the demand for oil turn over? Well, if they hold the prices down, it might take a little longer than we thought. I still think 2030 is when oil demand really turns over. So I think it's over a decade away. But, these folks that are saying 2040, 2050 before oil demand turns over, no, not a chance. We just saw a big battery improvement. There's more battery improvements coming. So once they get rid of the toxicity of car batteries, that's it. They make them light, make those batteries lighter, and you get 600 miles to the charge. Game over. They're only like 1 generation to 2 generations away of technology improvement for that. So oil, this might be our last oil trade to the upside. I don't think any of these oil companies are buy and hold forever. I hate Exxon and Chevron. Exxon in particular. Chevron, I hate pretty much too. But, I just think they're too damn big. So we need to be in the smaller, nimble companies with very focused resources that can be very cash flow positive. Because once these oil prices come down again sometime in the 2020s and then again in the 2030s, you're going to have problems. In any case, keep an eye on the offshore development. Let's see if Saudi Arabia in a year or two does anything to bust those up. They might. Maybe the oil industry is smarter now. But I think while the American oil industry is a lot smarter now, I think when you go to Guyana and you go to Africa and you go to Indonesia and you go to some of these countries that want to drill more oil, they're just looking at it from the standpoint of, we need the freaking money, so we're going to drill, baby, drill. And that's going to set up, right? That's going to set up overinvestment and then a crash. That's how that works. That's how those cycles work. So we have to keep an eye out for that. All right. I like that I got it so far ahead of everybody else. All right. So let's take a look at the chat. What do we got here? Zinc Mining Company, because of the new zinc battery. Ooh, we'll explore that. I should reopen that value walk. Not the value walk, the boy, it hurts. Oh boy. All right. My last little piece of USOU, I have a limit price set to sell at 90. When you take a look at those, when you take a look at the oil ETFs, you have to equate that with the price of oil. So my target price on oil has always been $80 WTI, and then that translates to around 90 or 100, 121. I don't know. I forget what the prices were. I put it up the one day, but I don't think you need to sell that last tranche of USOU yet. If it pulls back, and I haven't looked today, if it pulls back, you want to probably buy back in. I put a chart up somewhere of where the price points were. High taxes and regulations causing more prosperous people to move out of New York, New Jersey, and Connecticut. Well, I tell you what, Connecticut, you talk about a high tax place. Holy cats. I'm in Wisconsin, and we used to have real high taxes. Now we're kind of middle of the road. Connecticut, you better be rich to live there. Yeah, I don't know what the deal is with Pennsylvania. I haven't studied it, but Pennsylvania is just such a beautiful place. I can't believe that it is just so beat up. It's depressing, so depressing. Is it time to get into GE? No! A follow-up to that. Buffett sniffing at the price of GE. No! Why do you want a company that has a bunch of businesses that are shrinking or at their peaks, right? GE is years away from having a big turnaround. And I still maintain that they need to sell off one of the things they don't want to sell off. So I'm not excited about GE. No, GE goes to 9 or 8 or 7 or 6. Yeah, then you have to buy a little bit of it. But you know, I'm just not excited about GE. I just think that it's a mess of a company right now, and the fixing is not going to be overnight. So just take your time, and they probably have to cut their dividend again. So just take your time with GE. Everybody wants GE. Some things are cheap for a reason. WTI popped over $73 a barrel a little while ago. Why? I don't know. You tell me. Everybody's talking about $100 oil. I don't know. I don't know how they saw that coming. Is the rest of today's session going to be about your trip if you moving into stocks? Hey, Bill, we moved into stocks. Why is Antero going down? Um, Sentiment. People are negative about things that go down and they're positive about things that go up. Negativity feeds more lower prices. Positivity feeds higher prices. Ultimately, the value buyers step in. I like Antero. I think Antero's one of the best, if not the best, natural gas company out there. Well, there you go. Pull up the 5-year chart, which is always a good chart to look at. This is a great basing pattern. At some point, it's gonna break out. We'll get all the way back to its highs eventually, someday. People ought to be accumulating Antero under 20. And just suck it up and wait. Because when natural gas goes up, it'll be a lot. Right? It'll be a lot. It'll be event driven or economy driven, and it'll be a big deal. Yeah, I'm not saying have 10% of your money in Antero, 2, 3, 4%. I think I'm around 2. But it's a great company and it's a good position. And when it starts moving in our favor, you can do what's called pyramiding. It's okay to add the positions as they go up, right? Everybody's like, oh no, I gotta buy it when it's down. Well, if Antero starts to show better earnings on better economic fundamentals in the country and more natural gas, and I'm telling you, here's the surprise. Early in the next decade, coal is out. We're going to get rid of coal. It's going to happen. Now, what if I'm wrong about that? So what, right? the negative is a so what, and the positive, if I'm right about that, is asymmetric gains. So we have a situation here where around these prices, there's very, very little risk because we're going to keep using natural gas more and more, even if it's at a slow rate. But what if around the world, more big banks stop funding coal-powered plants? Right? Japan stopped. A big bank, I forget which bank it was this week. I don't know if anybody remembers, but there's a big bank, I think out of the UK, that said they're not going to fund coal-fired power plants anymore. Financing for coal-fired power plants is going to go away, either by practice, the companies, the banks deciding not to do it because they know that it could be a bad trade for them, be a bad investment for them, and that's mainly the reason is people don't want to throw their money away, or because the government starts saying that you can't build coal-fired power plants. So you want to be in natural gas. You want to gradually build that position the next 2 years, because in the 2020s, coal is going to get slaughtered, and that's why we need to be building these positions now slowly. There's the discount if you want value walk premium. Stay away from the 2021 leaps. Too much time value. 12 to 18 months out is far enough. You can always roll them. Yeah, Solar Edge, it's got more to come down, right? So this gap will have to fill. What is that? It's about 36. So they've almost filled the gap. But you got these other little gaps here, and you have to take a look at the revenues. They're not even doing $1 billion yet. Um, the year-over-year growth is about to turn over. That's a crappy chart. I don't like that at all. That doesn't tell us nothing. The problem with solar is that for the next couple of years, it's still a little bit challenged, right? So again, don't get anxious. You just got to start building these positions. With a quarter of your portfolio should be in this really long-term stuff, because when it goes up, it'll go up huge, and it'll be on something that you wake up to in the morning. Oh my God, look at that! It's up 25%. What'll happen. I think if you wanted to start a solar edge position, you could start selling some puts down around 36. So those will be in the. I do have an options article coming out this weekend. I know that there will be people excited about that. So we skipped September because I just didn't want you doing much. But we will have an October options article out Sunday night, maybe. Yeah, probably Sunday night. I'll get it out Sunday night. I gotta find a little time. I got 3 Brewer games to go to. What's happening with? I just talked about that. SunPower. Yeah, I told you the exemptions are. They're gonna get an exemption. They did, and SunPower immediately popped. So the folks who were selling $7 puts and got it put to them at $7 when it was like $6.90 that week, you're in good shape. Not only did you collect 50, 60, 70 cents, maybe a buck, you got net costs on SunPower in the sixes somewhere. You're gonna love that. You're gonna love that. So, I like SunPower. What do you think about SM? Oh, I'm not Kramer. SM Energy. I have no idea. You have to tell me about SM Energy. Why are MLPs struggling as oil has been rising? I talked about this. We're at peak oil pipeline, right? So you saw Occidental sell off a bunch of pipelines. That should have been a signal to you. We're near the peak prices for the oil-based MLPs. They know that. So you have to understand the MLP structure. These companies have been able to pay more and more dividends because they keep doing more and more financing to build more and more pipes. The demand for new pipes is basically gone once the Permian is built out. We're never going to need new oil pipes again. Those oil pipes in 20 or 30 years will probably start carrying water. So that'll be an interesting business transition very late in my career. If those pipes, if they translate those, we'll have to change the laws to move water though. So the natural gas pipelines are the ones that I like. Who do I like? What 2 companies do I like? I like Kinder Morgan, largest natural gas pipeline company out there. They have a long-term future, and I believe they're going to sell off some of their oil pipes. Why? Because there's people that need them right now, and they can monetize that today rather than just having to sit there and wait for the money to trickle in over years. So you've got RSI of 40 on Kinder Morgan right now. And you could probably sell puts on Kinder Morgan right here. Sell $17 puts. The odds of it getting all the way down into that 15, 16 range again, not high, but it could happen. So if you get a net cost of under 17, I think you're pretty golden there. I like Kinder Morgan. I'm just sitting on that, letting the dividend go up, letting the share price go up. We had a little dip here, last year because I've been buying it for a while. Bought it in here, went up, came back down. Bought it in here, went up, sold a little, So I do a little ebb and flow trading around the core position. But the other one, Enbridge, they've been interesting. This is a pretty strong support level. They're at it again. So if you want pipeline companies, Enbridge and Kinder Morgan are the two, right? Yeah, right. So Enbridge and Kinder Morgan, they are the two big honchos in natural gas pipelines. Those are the two I want. I don't want anything else. I don't want AMLP anymore. I got rid of that months ago, right? Um, some of these pipeline companies, if you really dig into them, as they transition from the MLP structure to a corporation, there can be a short-term pop, especially if they're going to get bought by ETFs, right? Because the ETF switched from telecom and technology to create that communications ETF. That's really helping AT&T, right? AT&T, CenturyLink. Why? Because now they're in a fund that has Facebook and Google and Netflix, and so ever since that happened, look at that. CenturyLink pulled back a little bit recently, but that's a buying opportunity. You know, CenturyLink, AT&T, both of them. You know, let's take a look at the fundamental chart. CenturyLink. I want to add them. I'll add them. Normalize. Let's put in a SPY. So let's take a, oops. So, just look at the last 6 months. CenturyLink, AT&T's on the worst. But Verizon and CenturyLink beat the heck out of the index. Let's look at the last 3 months. Since you really started getting into AT&T. Yeah, it's starting to come. Here comes AT&T. Fighting off that negative sentiment. See the curve? It's catching up. Verizon is the one where I don't think they treat their people the best. But man, they got good technology, especially on the East Coast. So I know somebody who helped build it. Verizon, you want to buy on pullbacks. AT&T and CenturyLink are buys right now. All right. Yep, I like selling the CTL puts. Those will be on the list. All right. Any other questions? Or are we done in a flat hour again? Holy cow, we're done. All right, watch some baseball this weekend. It's super exciting. And, root for the Cardinals because I need them to beat the Cubs so the Brewers win the division. All right, take it easy. Have a good one. Super exciting? Okay, selling puts isn't really super exciting, but it makes money. All right, have a great weekend, folks.